Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Okay, traders, we are looking at a video from Monday, January 12th. That'll look twice on that date. January 12th, 2009. We are looking at a red Omni in the S&P and a green Omni in the wheat, probably beans as well. Traders, I have said to you in many videos that the economy was going to look really bad after December. When the figures came out, they would be the worst anyone has seen in 50, 60 years. If you read any of the papers this weekend, I don't even have to go over it. You know what I'm talking about. The news is not pointing towards the upside by any means in the S&P. Don't fall in love with the upside no matter what happens for a while. This to me, and I've been trading a long time, traders, this S&P to me looks like it's well entrenched now in the bear market, and almost every day you will end up on the downside for the next, I don't know how long, to be honest with you. I don't want to give you an exact time frame, but I will say it looks to me like the rallies, if any come, just sell them and expect downside almost every day out for the next few months. Yes, every bear market does have its rallies. If they come, do not fall in love with the upside. Sell into those rallies. All right, traders, what I would like to mention, well, I got a few things I'd like to mention. What I'd like to show you in the video in the next few moments will be some charts. Traders, fundamentals always come out in the charts first. How many times have you heard me say that? My Omni proprietary moving average about 5-6 days ago in wheat and beans out of nowhere, the two markets get above the Omni proprietary average. That is not usual. That has not happened in a while. So I tried to jump on it last week, either Monday or Tuesday. I tried to buy the wheat. And I said, now that it's above the Omni average, you need to get long because we got some upside coming. We bought the wheat. And I guess one day too soon because on that day we got stopped out. Since that day, we have been moving higher, traders. So what I'm here to say is that the Omni average is working. That wheat trade is a good trade. Yes, as a day trade, it got stopped out. Of course, that happens with trades from time to time. But it was setting up last week above the Omni average, and now it's looking good towards the upside. So I want to show you some charts about that. And I want to show you charts about where we stand in the S&P. Where I left you off all last week, I was showing you that we had a wedge and we were going to have a failure of the upside, what I like to call a failure pattern. It would come down out of the top of the wedge and go through the bottom. So we sold S&P every day we could last week, and we were right for just about every day. Our Omni direction last week in S&P was second to none. It nailed just about the highs every day last week. The Omni is also telling us you got to stay with that wheat trade. So I want to show you that in the chart segment coming up in a couple of moments. One thing I will mention before I go any further, there are a few of you traders out there on my YouTube that post comments, and I'm just not getting where you're coming from, traders. Listen. It appears that you're giving me and the Omniacs a tough time because we're figuring out this bear market and calling the market right all the way down. You know what I got to say? Join us. What are you, crazy, fighting against us? If you found an entity that's actually calling this right, where all these other fund managers are like this right now, no matter where your 401k is, it's in half, you're hanging out with a bunch of Omniacs that are making money in this market and calling it right, and you argue that point? Are you actually traders, or are you guys who are disgruntled and lost all your money already and just fighting with people? I don't know what the problem is here, traders. I will say this. I'm not going to answer your comments. I don't get into the nonsense. I got too much time on my hands where I got to trade. But I will say, if you're getting frustrated because you're losing and you're watching our videos and then you're getting mad because we're winning, do yourselves a favor. Come join us at the site. Look, you can come to my site tomorrow, traders, and you can go, Oscar, I was the guy bashing you. You'll have no trouble with me. I understand skepticism. Listen, traders, I've been doing this for about 27 years. I don't even believe me in the Omni half the time. I understand where you're coming from. It is really difficult for you to believe that somebody actually has something that's calling markets correctly almost day after day. your skepticism. I can totally understand it. I agree that you should feel that way. But not everybody out there is a snake oil salesman. There are some of us, like me, that actually do this right. I do this to help people, and I have been helping people. And you know what? All you Omniacs that keep coming down for the help, you keep coming down. Don't listen to these nuts that got nothing better to do. They spend their whole days fighting with people on the web. We're here to trade, so let that rock and roll. Don't even defend me, Omniacs. Let it go. Who cares? Be here to trade. Concentrate on charts. Concentrate on the Omni. Concentrate on markets, and let the nuts be nuts. Who cares about them? I just wanted to get that out because a lot of you Omniacs, and I thank you so much for it, a lot of you Omniacs, I find you during the day starting to argue with these critics of ours. Don't do it. If they get you on the defensive or they rile up your emotions, well, then you're going to become an emotional trader. That is probably part of their game. They don't get me and my emotions. Don't let them get you. So let's talk about trading and enough of the nonsense. All right, traders, so I want to take you to some charts now. I'm going to show you why the wheat and beans, especially wheat, look good right here. And then I'm going to show you what you're looking at in the S&P. And we'll come back and we'll discuss levels for trading both of those markets tomorrow. Okay, traders, let's go to the charts. Okay, traders, you're looking at the wheat chart. This is the daily March wheat bar chart. Fundamentals always come out in the charts first. You have a fundamental taking place, in my opinion, because you got above the Omni proprietary average, which doesn't usually happen. Wheat has some sort of a channel right here. You can see it's working in it, right? You hit it, you hit it, you hit it, you come down here, you hit it again, now you hit it here, then you hit it here. The channel's working, right? Well, you'll see in a moment that the soybeans also has the same formation, but the soybeans took off and went all the way up here already to the upper end of its channel line. So this is the wheat chart. It gets above the Omni proprietary right here. We bought it the very next day. It turned around and stopped us out, but it came right back and kissed the Omni average. Then it rallied again, and it rallied on Friday, and Sunday night to Monday, it's looking good already. So I am telling you, fundamentals always come out in the charts first. An amazing thing happens. We get above the Omni average. I noticed it last week, early in the week. I start already trying to buy the market. I am still in buy mode. And we'll talk about fundamentals coming out in the charts first. All right, traders, let's go look at that beans chart. Okay, traders, just like you've seen in the wheat, look at the beans, except for the beans got above the Omni average first and ran right up towards the top end of the channel. So basically, lots of times you'll see beans lead wheat around. Beans got above the average first, then beans went to the high of the channel. I think it'll go even higher. It basically is telling us where wheat will be going over the next day or two. You see the wheat chart, you see the beans. Traders, we don't get over the Omni proprietary. It doesn't usually happen. It happens in both wheat and beans right before news comes out. That, if you ask me, is amazing. I had mentioned about fundamentals coming out in the charts first. I will tell you why when I come back after the chart segment. But wheat and beans have shown us fundamentals absolutely come out in the charts first, traders. Let's go look at the S&P now. Okay, traders, what we are looking at here is the March S&P daily bar chart. If you Omniacs have been following me in this last couple of weeks, especially all of last week, I actually drew something like this on the chart, and I said we're going to pop up here a little, don't fall in love with it, and we'll end up down here, right? Take a look at this, and you've all seen it happen before your eyes. We had the failure pattern where it broke out right here, but it was a false breakout, and it went right down, right to the bottom line, just like we said it would here. And now we are testing this bottom line. As of Sunday evening, we are below the line. We're right here. And I think that line is going to now act as resistance, which will push us lower. The S&P seems to be well entrenched in its bear market. It probably will put in some sort of a flat as this year starts to progress. By a flat, I mean, let's say you have a range. Whatever that range will be, we'll get there and find out. Then the market will do this for about 6 months. It'll just stay within that flat. I think that is what will happen eventually. But for now, we're coming out of this, and the likelihood is more of this, and Omni is calling for that for sure. So the March S&P coming out of that ascending wedge formation, puts in what we call the failure pattern. It does exactly technically as expected and breaks down through the bottom, traders. That is technical analysis at its best, baby. That is technical analysis firing on all 8 cylinders, if you ask me. That's a beautiful way to trade. Now, let's go take a look at a few more things here so that we can check this chart against some other things, other indicators, other markets, and we'll see what we think about the S&P. Let's look at some indicators here, traders. Okay, traders, what you're looking at now are the slow stochastics on the S&P daily bar. This very same picture looks just like this if you look at the Dow Jones Transportation Average, or if you look at the Dow Jones Industrial Average, and if you look at NASDAQ, the stochastics look very much like this. When stochastics get above this 80 mark, they become a short. You stay in short mode until it gets down below the 20 mark, and if it turns around below the 20, then you think about the upside. Right now, you see we went above 80, and we're only right here. We have a long way to go on the downside before it is anywhere near oversold. So stochastics are telling you that on a daily basis, the indices want to go lower. Let's look at a few more indicators. Okay, traders, the next chart you're looking at here is the CCI, or Commodity Channel Index. Once again, you can see it got into, if you just use a line, visually it's very easy to spot, got into the overbought area as it did the time before, turned around and broke right down, crossed with the red portion of the CCI average, and that is a bearish signal. So you have indicators pointing lower, you have a formation pointing lower, you have the leader of the indices trying to go lower, you have bad news. I mean, come on, traders, we're in a bear market, trade it like a bear, sell the rallies. Let's look at one more indicator here. Okay, traders, the last indicator I will show you this evening is the WADX. It's the average directional movement indicator on the daily S&P. When the green is pointing down and the red is pushing towards the upside, you have a very bearish indication. You can see it's mired in that right now. The opposite, of course, would be with the red going down and the green going up. That would be bullish, but that's not the case. You have the green going down, the red going up. There is that little hook right here, but I'm not going to pay mind to that yet. We'll see if that turns into anything. The other indicators are certainly clearly pointing towards the downside, as is that formation we keep talking about that we're now below. So, hey, traders, technically you are looking at a short or at least a sale of rallies in the S&P according to these charts. Do your homework, look at the wheat chart, look at the bean charts, look at the S&P charts, compare your work to mine, make sure you agree before accepting an Omni recommendation. So, traders, you've seen those charts. Now, traders, fundamentals always come out in the charts first. You know what I was mentioning, why I keep mentioning that? We noticed that the wheat and beans got above the Omni proprietary average last week. Nobody really knew why, but I said, boy, oh boy, that makes my eyebrows stick straight up here. I'm looking, I'm going, boing. I'm going, wow, something's going on here. And guess what happens? We get an announcement that China's buying tons and tons of wheat and beans. They definitely mentioned the beans. You know they're buying wheat because wheat's already on its way up. Fundamentals always come out in the charts first, traders. You've seen that just by that example. Why would the wheat be going over that average? It hasn't done that in a long time, and as soon as it does, a couple of days later, news comes out. That is fundamentals coming out in the charts first. So keep your eyes open for things like that happen. All right, traders, again, for Monday, Jan 12th, 2009, we got a red Omni in the S&P, baby, down again. I'm clapping for a red Omni because at this point, I'm just glad that we can figure out which way they're going. All right, so the S&P, Omni says to sell the low to mid 890s if we can get up there, trading about 882.5 right now. If we can get up into the low to mid 890s, you go short the S&P. Put your stop in a sensible place. Traders, I tell you this in every video, a stop is your best friend. Always place your stops and place them first. If you are not sure where to place stops, simply come on down to my site. It's www.livewithoscar.com. We will help you with stop placement. All right, so you're going to sell the mid to low 890s. Profit objective is the mid 850s on this down move that looks like it's coming our way. On the way down, if you do get lucky and sell it in the low to mid 890s, You got support at 879 and support again at 869 on its way down to the mid-850s. That's what we're looking at in the S&P traders. Do your homework. Make sure you agree before accepting anyone's recommendations. Okay, wheat, baby. We got a green arrow in the wheat. I love green Omnis, boys. You don't get them a lot in S&P lately, but we're getting them a lot in the grains, wheat and beans especially. The wheat by the mid to low 620s. The mid to low 620s if the wheat gets there. Trading 632 right now as we speak. We have a profit objective for Monday of 645 and then about as high as the mid to low to mid 670s this week. We think wheat could be trading in the 670s this week, traders. Again, I will tell you to do your own homework, but you saw the charts. Indicators, I will say this as an analyst, the indicators are all up and they're stuck in the overbought area, but many times when you're about to go into a bull move, that's what indicators will do. That's when the formation takes precedent over indicators. That is the case in wheat and beans, in my opinion. Remember the channel I showed you? Beans got to the top of that channel, or almost already. Wheat is on its way up to the top of its channel, in my opinion. Do your homework, see what you come up with. All right, traders, the beginning of a week. We had a great week last week. We're looking to do it again this week. I will say this, we've had hundreds and hundreds of new members at the Omni Trading Academy. You go, new members, baby. YouTube, right? YouTube's doing great for us. All right. Traders, many of you have signed up, but I don't see you coming to the chat rooms, which tells me maybe you haven't read everything that you need to read. When you get to my site and you've become a free member, you should come to our free chat rooms. I have free open trading chat rooms where you will find me on live camera and live microphone as many hours of the day as I can do it. I am there as often as I can. I'm a human. I sleep sometimes. But barring that, I am on cameras helping you traders get through these recommendations. So for you new traders, thank you for coming down. Welcome to the Omni Trading Academy. And if you don't know about the chat rooms, get yourselves into the free chat rooms. That's where all the action happens. All right, traders, for you traders, I don't like to say good luck. You know, our term for good luck is up yours, right, traders? So for you traders that entered the trading contest this week, looking to win some cash, up yours, Omniacs. I hope all of you win. All right. All right, traders, there's not much else I can say for tonight. Watch for downside the S&P. Watch for upside in wheat and beans. Definitely the wheat. I mean, nothing's definite. You know what? Strike that word from the record. Traders, there is nothing definite in trading. So I can't say definitely the wheat is going higher, but the analysis says, oh, you better tell them the wheat's going higher, so that's what I'm here to tell you. All right, traders, remember, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading, and you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.